The S&P 500 is just 2% away from its all-time high, and investors worldwide are on edge. What's driving this market momentum? The key lies in the U.S. China trade talks currently unfolding in London. These discussions could reshape the future of global trade and impact every investor's portfolio. Stay tuned to find out how these talks could change the investment landscape forever. Welcome to our channel, where we bring you the latest insights from the world of finance and investment. Today we're focusing on the S&P 500, which is tantalizingly close to breaking its record high. This comes as the U.S. and China engage in crucial trade negotiations, with export restrictions and trade deficits taking center stage. We'll explore what's at stake for both nations and how these talks could influence global supply chains and tech stocks. From rare earth materials crucial for semiconductors to potential changes in American export policies, we'll cover everything you need to know. Whether you're an investor or just curious about global economics, this video will provide you with valuable insights. In today's video, we'll delve into the intricacies of the ongoing U.S. China trade negotiations. On the table are critical issues like export restrictions, which have far-reaching implications for industries worldwide. The U.S. is urging China to increase exports of rare earth materials, essential components for manufacturing semiconductors, smartphones, and electric vehicles. Meanwhile, China seeks relief from U.S. restrictions on exporting chip-making equipment, aircraft parts, and ethane. These negotiations are about more than just numbers. They are about setting the stage for future economic relations between two of the world's largest economies. We'll discuss the massive trade deficit that stood at $295.1 billion last year, and how it's already at $88.02 billion through April 2025. You'll learn how the outcome of these talks could impact global supply chains, tech stocks, and ultimately your investment strategy. As Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick note that initial talks are constructive, we analyze what this could mean for market confidence and the S&P 500's trajectory. In today's video, we're diving into the latest developments surrounding the S&P 500, which is currently just about 2% shy of reaching its all-time high of 6,147.43 points. This slight upward movement is capturing attention for several reasons, one of which is the ongoing U.S. China trade negotiations currently taking place in London. These talks have significant implications for global markets, and investors are keenly monitoring every detail. Although officials have not released concrete outcomes yet, some glimmers of positivity have emerged. U.S. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick have both described the initial discussions as constructive. Yet, the lack of specificity around progress highlights the complex nature of the issues at hand, particularly regarding export restrictions. At the heart of these negotiations is a critical topic: export restrictions. The United States is advocating for China to increase its exports of rare earth materials, which are crucial for the production of semiconductors, smartphones, and electric vehicles. These materials are integral to modern technology and supply chains, making them a pivotal point of contention. In return, the U.S. may consider easing certain restrictions on the export of American goods, including chip-making equipment, aircraft parts, and ethane. According to a report from the Financial Times, these discussions could potentially reshape the dynamics of trade between these two economic superpowers. Let's consider some numbers for context. Last year, U.S. exports to China were valued at approximately $143 to $22 billion, whereas Chinese imports were significantly higher at $438.74 billion. This imbalance resulted in a trade deficit of $295.51 billion. Fast forward to 2025, and the deficit for the year stands at $88.02 billion as of April. These figures underscore the trading disparities that are key issues in these negotiations, impacting not only the economy, but also a slew of industries, especially technology. For investors, the stakes are high. The outcomes of these discussions could trigger shifts in supply chains and influence global tech stocks, areas that many portfolios heavily rely on. Thus, as the talks continue, so does the anticipation from stakeholders around the world who are eager to see where these discussions will lead and how they might affect the delicate balance of international trade. This situation serves as a reminder of how intricately connected global economies are and the far-reaching impact that international policies can have on everyday markets. Stay tuned as we keep an eye on these negotiations and what they might mean for the global economic landscape moving forward. Let's recap what we've covered today. The S&P 500 is inching closer to its all-time high, driven by optimism surrounding the ongoing U.S. China trade negotiations. These talks, unfolding in London, are focusing on critical issues like export restrictions. The U.S. is pushing for increased exports of rare earth materials from China, vital for industries like semiconductors, smartphones, and electric vehicles. In return, the U.S. may consider easing export restrictions on chip-making gear, aircraft parts, and ethane. This negotiation is not just about balancing trade deficits, which last year stood at a staggering $295.51 billion, but also about shaping the future of global trade relations. As of April 2025, the deficit is already $88.2 billion, highlighting the pressing need for effective solutions. Investors are closely monitoring these talks because their outcomes could significantly alter supply chains and influence global tech stocks. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick have described the initial discussions as constructive, although specific progress details remain undisclosed. What does this mean for the S&P 500? A favorable outcome could boost market confidence, potentially propelling the index to new highs. However, uncertainty still looms, and investors must remain vigilant. The stakes are high, not just for the U.S. and China, but for global markets as a whole. As these talks progress, we'll continue to provide updates and insights to help you navigate the ever-changing landscape of global trade and investment. If you found this analysis helpful, don't forget to like and subscribe to our channel. Stay informed on the latest in finance and investment by exploring our playlists, Wall Street, Companies, and Investment 101. Your journey to smarter investing starts here.